I think that we have sort of turned the corner on inflation. And here's why I think this. The Bank of Canada did absolutely nothing. They were super slow to react. But now, inflation is slowing a little. But what did they think was going to happen? A small increase takes a long time to trickle through all levels of the market. They're turning the knob every single month as if magically it's going to stop things overnight. It doesn't work that way. But I think we're already at a point where if they just did nothing more, they're probably already there because they've broken the housing system and then break employment.
When I was broke, I had rich habits. When I was broke, I had rich habits.
All right, welcome to episode 40. Oh my gosh, that's crazy. We are
41.
Over 41? Cheapers. We are over 80% through the year. That's disgusting. This is the Master Keys podcast, Atlantic Canada's #1 real estate investing podcast, taking over the world. Appreciate the support. Love you guys. I'm Chandler Haliburton.
I'm Neal and Andreino.
As always, if you find anything interesting in today's episode, please like, comment, subscribe. We're getting some good feedback on returning visitors and all that stuff. But we also are seeing the algorithm that some of you are watching and not pressing that like button and not subscribing. If you like the content, press like, because we got some crazy stuff going on today in the news, fun stuff. But we're also going to go into new construction, right?
Yeah. Today we're going to talk about we talked about how we think the Burr model might be temporarily dead. It's not dead forever, unless the deal's amazing. It's a lot harder to get that to go all the way across the line.
Yeah,
and so you still need to keep moving your business along, and we still need more housing inventory. So we thought we'd dive a little bit into new construction, some of the stuff that we've faced, where we think things are going, and then kind of just the high-level process of what that looks like for all of you that are interested in continuing to grow your business and maybe make the transition from buying old product to new product. Yeah,
so if you've got a project that you have questions about, because this actually kind of came from a listener's question asking us why we haven't gotten into new development and things like that. We're going to unpack some of that here today. So if you have questions, comments, put them down below. But I'm going to start off with some amazing friggin' news.
Hit me.
We've done it. We've beaten inflation. I've got the great news.
Oh my God.
For those of you struggling out there that are trying to make ends meet, worried about prices, on an earnings call, one of the big execs for Costco stated that despite inflation and rising costs, they are not going to change the pricing for the $1.50 hot dog and pop combo. That thing is locked in. So here we are, man. One big win for the people.
So I didn't dive into it, but I did.
Dive into it. There's nothing to dive into.
No,
that's the story.
Well, why don't they change the price?
Because, man, they know how much people love that damn hot dog.
There's more to it. There's more to it. But there's something.
How are you going to make a conspiracy out of a $1.50 hot dog? There's more to it, Neil says.
It's not a conspiracy. They're not giving hot dogs out. So two things. The second I saw this a couple days ago, it popped by on my phone about it.
Yeah.
And in my head, I was just like, I can see in the future, there's just going to be giant lineups out in front of Costco because you just can't eat anywhere else affordably. And so literally
it's like the propane lineup during the hurricane. It's going to be the hot dog lineup.
Every lunch hour, just everyone is going to go to Costco. And outside, there's going to be guys selling hot dogs for $1.75, and they're going inside buying 100 Costco hot dogs, then they're going outside look, you can skip the line, but it's 25 cents more.
Yeah, hot dog markup.
The future is this going to become Costco and just people buying these damn hot dogs?
Man, you took a nice feel-good story and you turned it into hot dog price gouging.
I wanted to see, but what was their logic on why they keep it there? Everything else went up.
I think it's sort of a good faith gesture. I mean, know what? This is like a staple. This is something that people associate with our brand. We're going to keep doing it.
This is since the 80s that it's been $1.50.
Yeah, that was pricey back in the 80s. You were paying full freight for that.
So they made all their money in the 80s.
They're also a good-sized hot dog.
And they're good tasting hot dog. Their food.
This is now a paid ad for Costco.
Their poutine?
Their pizza? Their chicken wings?
Oh, the chicken fingers.
Remember when they used to pre-cook the chicken wings and get? I don't know if someone told me the other day they're still. Anyway,
I'm going there tonight.
We're getting sidetracked, but it's phenomenal news for the fight against inflation and food pricing. Those hot dogs are still available. Yeah.
I'm trying to see here how they're doing this. Sorry, I'm totally.
Yeah, you're really diving into this. I feel like also, and I was reluctant to talk about this, but if we're going to start hyper locally here, the Dal homecoming chaos. I made a video where I kind of joked but was half serious about how Dal maybe doesn't hate the fact that these students are partying just off campus because it is crushing the value of some of those neighborhoods. I know for sure, unequivocally, that some homeowners have sold out of that neighborhood because they are fed up with their neighborhood being overrun as a student party
Isn't that
block.
weird? Where it finally like turns around. It's like it used to be a good thing to be in like a student neighborhood, and now it's like, wait a second, this is too studenty, and then it's gonna switch around. But
Dude, there's like
ultimately, all these
4,000
houses-
people there partying.
Ultimately, all the houses will just get converted into multi-units, and then
My theory was, though, that Dal is going to swoop in and buy those out because Dal's in a big argument with the Heritage Advisory Committee
True.
right now because of a home that they bought on Edward Street, or a couple homes, I don't know, that they're planning to demolish. And that is a residential area, and Dal has expanded. If you look at it from University Ave, like they pushed all the way towards south. They're all the way down to Oxford now. Then the next thing is, they pushed all the way to Coburg. They're going to push to Jubilee at some point in
totally.
one fashion or another. So one person thought I was being crazy, but I don't think it's that crazy.
speaking of conspiracies, I think my hot dog one makes more sense. But on that
I'd pay
same
$1.75 for a hot dog right now. I'm not going to lie. I'm hungry.
but that's on that same note. In that whole district, what's this whole deal about taking the corner stores at the shutdown at 11? That one I posted about because I thought that was a bit ridiculous that they can pass something like that through so easily when they did a poll within the neighborhood and they sent out a letter to whoever it was, 25 of the residents that live within a block of it, and only 2 responded in favor.
So, all right, let me see if I want to
2 responded in favor, and that's
Yeah.
enough to then change the hours and effectively just nuke those businesses. And I know both of those businesses, I think both, if not one for sure. I drove by recently. They gutted and renovated the whole place. Like they did a whole new facade on the outside, a whole new interior. Like they've invested into that business.
So I have a connection to this area because I used to buy the penny candies at the pharmacy up the road. I think they call
Penny
it Jubilee
candies?
Junction now. Yeah, you get penny candies. You get a little bag for like 50 cents. You get all these candies.
No wonder
When I'd walk up
feeling like
from the way.
$1.50 is expensive for a dog.
And then I lived on Preston Street, the corner of Preston and Jubilee, and we had parties back then and got noise complaints. And that they were very modest compared to this. The whole thing about closing like this loophole. So effectively, corner stores that exist in residential areas are not supposed to be open past 11. Why these ones were allowed beyond that, I'm not really quite sure, but they're effectively just reinforcing something that's already in the zoning now for these strips. And it
Were
really
those corner stores built predating that 11 p.m. rule?
Yeah.
Okay.
And I think that this was a way to curb this student activity through a back channel, which is those areas, because Jubilee Junction, AAA, like that has become this hub because they're open till 3:00. It is like a pizza corner. That's not on Pizza Corner, it's down on Jubilee. So by closing that earlier, the city thought this would be a way to mitigate some of the student after-hours drinking behavior in this neighborhood. It's kind of like you take something away over here to prevent the actual thing that you want to treat over there. And it really does only affect these 2 businesses, but it does affect those businesses. But don't you kind of understand, like if you lived in that area, you tell me you have no sympathy for people, and that is an old area. The people that live there tend to be senior. There's either students, they're either 19 or they're 65. There's like no in between. Do you not somewhat sympathize for them?
I sympathize a little bit, but not like a ton for this. I'm sorry, I do, but I don't, because it's not every night. Like this is okay. It's homecoming. It's the opening of the school for the year. They don't have big parties like this all the time. Those corners are busy on like a Friday and a Saturday during the school year. And when I say, and not on like a winter day, it's only in the fall and potentially near the end of the school year. So it's like probably 2 months of the year. They're getting Friday and Saturdays. And when by busy, they're like maybe 10 people standing on the corner,
Right.
maybe 20 people. Like, and to be honest with you, I've gone there a bunch of times, and I'm not as a student, but because it's the only thing that's
creep.
open.
Okay.
It's the only thing that's open at like 2 a.m. to
Right.
get some food sometimes. And so I don't know. I think it's a bit of a burst out on like a super specific event. On the same note, like specific events downtown cause downtown to become an absolute gong show. And even in other neighborhoods, there's things that go on that go crazy. So I don't know.
What do you think of my conspiracy theory that Dal might not hate it because they can slowly creep
I don't think it's
over that
conspiracy.
direction?
I think there's definitely some people that are like, this isn't the worst thing in the world, and they are aggressively trying to buy more real estate, and because they're struggling with housing. Like that's becoming,
And it's big money for them.
it's big money for them. First of all, they make money on the housing, but it's even bigger that they are now struggling because people are deciding to go to other schools because they cannot get housing at this school. Like they are losing a student body because of that, and a bunch of schools are facing this around Canada But Dal is really getting beat up on it, and then the city on top of that has
this
doubled
can't
down on the
be
heritage
this can't be
side
great for the reputation
labeled a
either.
bunch of
Because this
heritage
stuff's
homes.
making national news. So if you're a parent, you're like, oh, yeah, I'm going to send my kiddo to Dal. Man, what's funny to me is like when I was in university, Dal was not this cool. Like it was
That's what I
not
said.
a party school. You know, and now it is. But anyway, I don't want to go into that too long. It's super hyper local. People may not care about it, but I don't know. It's interesting, and it does have a real estate element to it because it's affecting property values in those areas.
Speaking of real estate thing that I'm going to say is semi-hyper-local, but definitely went national, if not international, is Hurricane Fiona.
Oh, yeah, we never really talked about that either.
We've never talked about that, but that was something that just happened here a week ago. I missed it completely.
Yeah, Neal was on vacay. Color me surprised.
So I was out in the harsh weathers of Italy dealing. No, I'm not going to be insensitive, but the Hurricane Fiona hit while we were gone, or while I was gone. You were here more to experience it. It seemed like it missed Halifax a bit more. It definitely rocked Halifax, but Cape Breton.
Cape Breton, and just before the causeway got smoked. And then PEI got smoked.
And literally houses got washed into the ocean.
Yeah.
The PEI, I would like to see like how much landmass did they lose. I saw a satellite image post Fiona, and like the whole ocean around PEI is like that
filled with
reddish
sand.
brown because all their sand gets washed away. And like they already have an erosion problem, but they must have lost like 3% of their landmass over the course of a night.
Yeah. Scary stuff, man. And this was the first one where I was like legitimately concerned about my properties. And maybe it's because I have more properties now than I used to, but I don't know. There was something a little bit different about this one. And they keep calling things like, oh, it's a generational storm. It's like, well, it hasn't been a full generation really removed from some of these other storms. And now Ian just smoked Florida the other day. That was no joke. I actually have a little story here. I don't know if you're a Hemingway fan, but the Hemingway house got hit up pretty hard by Hurricane Ian. Anyway, people were curious about it because he's got like 60 cats that live there, but the cats are safe. So anyone wondering about the Hemingway house in Florida, the cats were saved.
So shout out to everyone who's a landlord or homeowner, and if you got affected negatively, like feels for you. It sucks. It's crazy. The one thing that I think it's worthwhile chatting about a little bit, and I haven't dove into it too much recently, but insurance policies in this situation,
man,
like they don't cover all of this. Like, don't just assume because you have insurance and then your house gets washed away that you just get a new house. You don't always get a new house out of this. Like overland flooding is something that a lot of policies don't cover.
I also had someone kind of like, I can't remember who it was, so I don't remember the exact details, but they were having an argument with their insurance company because their insurance company was saying it was an act of God. And it's like, well, when did these insurance companies get so religious? Like that seems like a weird
there's a profit to it.
Catch-all. But you missed out on this, but you know how it goes where everyone leaves their home insurance to the last minute?
Yep.
So insurance companies stopped taking on new clients leading up to the hurricane. And so if you had a closing right around the hurricane date and you're like, oh shoot, I got to go around and get around to getting insurance, they were not taking new policies.
I didn't miss out because I had a refi coming on the Friday of Fiona and they wouldn't update my policy for the refi.
Yeah.
So my refi got frozen. I had 2 refis that got frozen that got pushed to the next week because of Fiona too. My insurance guy's like,
Neal was over in Italy waiting for that bag to drop.
and they hit me with, they called me and they're like, good news, no problem raising the limit. Bad news is I can't write your policy because all new policies got frozen due to the hurricane.
Yeah, there was an agent in my office the other day who the bank required an appraiser to go out and relook at the property post-hurricane to make sure it was okay.
That makes sense.
Yeah, but those premiums are going through the roof. There's no question about that. They'll be up now because there's going to be some settlements. When that roof ripped off in Spryfield, I was like, oh, please be Neal. Please be Neal.
Oh, my God.
Never. No, I wouldn't wish it upon you. But I was like, you hear like one ripped off in Dartmouth and one ripped off in Spryfield. I think they were both flat roofs that had the pitch put on. And a guy who does my roofing and one of my contractors was looking at one of these roofs, and the person who put the pitched roof on top of the flat had literally just put down 2x4s around the edge and tacked the roof to it. And so the wind got up underneath there and just peeled it back like opening a can of beans.
That's crazy. And I remember the last one that we had, what was it, in 2019? What was it, Dorian?
Yeah.
That ripped a few roofs off as well in downtown. I remember that.
Yeah.
But again, just maybe check your policy and see. But again, overland flooding and the act of God and insurance is a funny thing. Like you pay a fortune for it now. It is so expensive, and it's like awkward because it's like, okay, it's only a $2,000 thing that I need to put through insurance. Is it worth doing it because my rate's going to go up?
No, you have a deductible that's $5 or $10 grand.
Or your house is so damaged that you're like, oh, insurance finds a way to not cover it because we don't actually cover like major damage. And it's like, what the hell? So anyways, take a look at your policy. Overland flooding is something that I was very surprised it didn't cover. Earthquakes, there's like a million things like that it doesn't usually cover. Here, earthquakes aren't really an issue. But anyways, I just want to bring that up because it was something that I think probably affected a lot of our listeners. So you fared out pretty good. We had some
knock on wood, man. I fared out
doors.
very well. I had some down tree limbs, and then some tenants unfortunately were without power for in some cases I think up to 5 days. But no water intrusion to speak of. A couple sump pumps that were overwhelmed, but in unfinished basements. So honestly, not bad.
I just had a porta potty fall over at one of my sites.
Oh, that's messy.
It was my house actually.
Send Josh to clean that up.
I have a client.
Shout out Josh.
Yeah, I still have a client who doesn't have power.
Yeah, there's a couple kicking around, but inside the city, most people have power, but certainly in areas of the province, they do not. But
anyways,
again, that's all really local to us. But let's transition here, and we're going to talk about rates because we always freaking talk about rates, but it's relevant to the housing market. With the last increase, I was curious what was going to happen, if anything, to fixed rates. And for 3 months now, the 5-year fix has remained pretty constant between 4.5% and 5%, depending on lender and whatnot.
Yep.
And what's interesting is in the last 3 months, obviously, the prime rate, the overnight rate, has gone up by 175 points, but the 5-year fix has not moved. And this underscores the fact, and I mention this to people all the time, that the 5-year fix is related to the bond yield, not related to the bank rate. It's different. Check out our previous episodes as to why, but it's good to see the fixed rate staying pretty steady, even though variable is raising up. But it means now also that most people's variables, which would be prime minus a half or prime minus a point, are right now also sitting between 4.5 and 5. So right now, variable rates are effectively on par with the best 5-year fixed rates that you can get right now. And the Bank of Canada is going to raise probably by another 75 points anyway between now and the end of the year. So we are going to enter that period where the variable rate will be above the fixed rate for the first time in, jeepers, I can't even think of how long, but for a very, very long time. And we've talked a lot about this, and I've been hardcore in the variable camp. I don't totally feel like I'm eating crow at this point, but I know you probably have some thoughts on this.
Yeah, I mean, I was more of a fixed rate person. It depends on your situation. When we talked about it before, it all boiled back to being dependent on your situation. But I was a bit of a fixed rate person at that point in time because I felt that there was a couple hundred points to come, and there have been a couple hundred points that have come since then, and there's more to come. And so my feeling was it was about 200 basis points in the difference. But if you took that, I think you would be in a lower position, and it would give you a fixed number that you know that you're paying. I think in 12 to probably more than that, 16 months from now, your variable rate will be lower than that fixed rate you would have taken. But again, to give some,
I agree.
Give some consistency,
it's the next 12 months or so that it's going to be a question mark as to which is higher.
Exactly. But I think to give some consistency and some understanding of where your rate's going to be, it's nice to have done a fixed rate. And I think more on the commercial side because commercial rates are a fair bit higher. Like I just got a residential variable quoted this morning and it's 5%, which is not that bad. Mm-hmm. But on the flip side, I got a residential or a commercial variable quoted about a month ago and it was like 7 point something %. Like it was insane. Yeah. And that's in the banks don't even like on commercial side, they didn't want to lend on a variable. It was cheaper to take a 2-year term than it was to go with a variable. And so that's where my push for the fixed rate concept is they were a fair bit cheaper on the commercial side. So at this point now, I would say, yeah, definitely take a variable unless you really are wanting some stability because always in the back of my head looming, I'm like, is there a chance that they're still going to keep running it up? Because like we've talked about, we have some concern and maybe not full faith in the idea of their inflationary numbers. I know the hot dog's going to bring inflation rate back down to where it needs to be, but it's
holding us down.
There's some concern that there's some manipulation going on to the inflation numbers that might not reflect truly what's taking place. And like we're going to talk about in a little bit, interest rates have an impact on different things over a period of time, and we haven't seen the impact of the interest rates across the board yet. We are just starting to see almost the start of what they're going to do. And I think next year is going to be a telltale for that.
Yeah, I mean, a couple things that are worth noting. The one challenge with opting into a 5-year fixed rate is that your break penalties are going to be higher, right? And as investors, it is nice to keep the flexibility of a variable rate. And then so the next question becomes like, well, I'll just do a 1 year or a 3 year or something like that. But the 1 and 3 years I think are around 5.3 to 5.5. So again, now you've got that same cushion built in where it's like, okay, well then still the variable's a little bit better and I have that flexibility. Obviously, if there was a period maybe 6 months ago where you could have locked in a 2-year fixed rate, that could have been a pretty lucrative thing. But there's also the problem of qualifying. Like remember, when you were qualifying, you either have to take your rate plus 2% or 5.25, whichever's higher, and like that's what you have to qualify at. Some people just can't qualify for the fixed rates, but that's gonna. They're both getting hard to qualify. And I saw a study, I don't know if you see it there, where it's something like almost half of buyers in Canada right now have decided to press pause on their search due to interest rates.
Yeah. It's 44% of Canadian buyers are pressing pause due to higher interest rates, and 34% are saying that they're not going to press pause.
This speaks to the public sentiment thing.
It does. Yeah. The one thing I think that is like I don't think it's due to higher interest rates. I think it's a combination of things. Because I think people are wise to the idea that it's, well, I guess it's because of higher interest rates, but it's all the things to come. Like I think everyone's unsure of what's to come. If you told them that the rate's going to be 7% now for the next year, and then, or it's 5% on the residential side for the next year, and then it's going to start going back down, and they had confidence in that, I think they'd still be open to buying. But I think everyone's pausing because they don't know, like, is it going to stay where it is, or are we just going to keep running up, or is the economy really going to start to take a beat down? Because I think logically, if you take any of those buyers and you sit them down and you say, look, we've talked about it here before. You're going to get that house for a 15% discount. You're going to pay a higher rate for the next 24 months.
Yeah, that was a great breakdown. Yeah.
And then that extra rate cost of 24 months is going to be $12,000 or $25,000, but you're saving $150 on your house purchase. And so in 3 years from now, you'll actually be in for $150,000 cheaper than if you had signed a 1.83% mortgage 8 months ago
price,
at an inflated price.
Yeah.
And so I think they'd all buy at that same point if they can still qualify. But I think there's a bigger, and I think a lot of people kind of get that. But I think there's a lot of like concern about, is there something worse to come?
It's also kind of funny because I still think about it like, man, 4.5% on a 5-year fixed isn't too bad.
That's still so chill.
And so it's been like that for 3 months. So people keep hammering their head on the overnight rate. Well, it's gotten to the point now where if you're getting new money right now, the difference between variable and fixed in this moment is moot. It's about the same. So you will make whatever decision you're more comfortable based on your risk sensitivity and your budget ability to absorb, say, another 150 points of variable increase. But the interest rate that you can get on a 5-year fix, if you're going that direction, is the exact same as it was 3 months ago, and you would then be holding that for the next 5 years. So you do have a pretty comfortable level of predictability. And also, to your point, in the last episode, you're like, oh my gosh, people are going to all feel this stress and they're going to have to sell off. Well, they can opt into a fixed rate mortgage right now at around 4.5%, maybe 5%. So what is this? Like, I don't know that that's going to squeeze as many people as you think it is when you were like, oh, it could come down 25% because people are going to be squeezed.
I don't think that people are going to have to sell off because simply of an interest rate. I think,
right? You think
because of a mortgage rate,
right? Yeah.
I think it's the fact that they own a house, they own 2 cars,
right.
They don't simply eat Costco hot dogs. They have a lot of other expenses that they're going to get beat up on, and we all know, like, the last 2 years, people have been frivolous and have bought a bunch of shit. I'm guilty of that. They should not have bought, because it felt like things were just going better because things just kept getting cheaper and cheaper and cheaper to borrow against. And so there's lots of ATVs and boats, secondary homes, trips that have been booked, all these things that are like eating away at this money. And during that time, it kind of worked because money was just flowing out. On top of it being cheap, there was free money from the government going out all over the place. Yeah. And so people had this ability to do that. Now they cut off the free money. They made the money that's out there way more expensive. And so, the mortgage rate's not going to necessarily kill them. But like car rates are ridiculous. Like vehicle financing is insane. And like, so then you start kind of building up your line of credit, home line, like, or not even home line of credit, the unsecured lines of credit that most people have one. They're like maybe $5,000 to $20,000.
Yeah, that's what actually kills people, not their mortgage payment. Yeah,
Totally.
100%.
Those are now like 9%, like 9, 10, 11, 12%, because they're unsecured. Any unsecured stuff that you have, anyone who had investments in the market that they might have been relying on, the market took a big beating, so they drew, and so they might have had to draw on that. And now they're like, okay, it was 100, now it's down to 70. Plus, I have to draw on it, so now I'm selling at the bottom, getting nuked. So I think like that combination of everything going on, some people might be like, you know what, I can still get out of my house a little bit ahead right now. I'm gonna make that sale. Or if they're in a rental position and they have all these other things financed, like their rental rates, if they moved anytime recently, their rental rate was like, oh, I was paying $1,200 for that same space. I'm paying $1,750 now. On that note, I'd like to jump in just quickly to update some stuff on the car market, because I mentioned it I talked about it in the last one about the luxury car market.
Okay.
This is something that I've kind of learned about because I've been digging into it further, and it's not just simply because people are less apt to spend and that's what's causing the car market to slow down. And this is the same with the watches and luxury goods segment. The luxury car market, and like the G-Wagon's a prime example, those prices were so inflated. What was happening is there's a market behind the scenes between all the dealerships. So you have the producer Mercedes, you have the dealers, which is actually Mercedes dealerships, as well as exotics and used car dealerships and all that. And then you have the actual baseline consumer. And I'd say there was more G-Wagons or more luxury cars trading their hands with the dealers, and they were wanting to stockpile them as a hedge. They were basically investing within these cars, because what happened is, okay, Mercedes...
Especially when they had no new inventory.
Exactly.
Yeah.
All these companies, whether it be tech, luxury goods, vehicles, were all saying, we're not going to be able to produce at the numbers we want. So that's going to force up the values of these things.
Yeah.
So people started stockpiling. So dealerships started stockpiling, which caused this inventory crisis. And they would sell one at this marked up price. And that was a proof of concept. They'd be like, well, look, we just sold an F-150 for $120,000, or a Bronco for $50,000 over sticker, or a G-Wagon for $100,000 over sticker. And so then that justified them going to auction and buying a bunch of them overpriced. But the auction was just between two dealers. And so the dealers were holding all this inventory and holding the bag, and they were artificially creating this value bump. The second rates went up, and then the dealers now have to sell because the rates went up, and they buy on lines of credit. So now they were trying to start to dump some of their inventory. And the second they all started trying to dump at the same time, the values started coming way down, because there never really were consumers. There was the odd person buying these cars at these $50,000, $100,000 markups. It was
low sample size.
But it was low sample size, and they were never consuming as much as actually what was going on. And so dealers were sucking up all the inventory, and it was a back end thing going on. So I want to just mention that, because if you guys listened to the last one where I talked about luxury goods market and kind of why I thought the market was falling apart, I've been digging into it more, and I'm starting to find out this is what's going on. Watches were a big thing as well. Watch dealers, like, that's half of the game. That's where they make a lot of their money, is trading between themselves. Is they're ordering 15 from Rolex, and then they're getting them, and then they're selling them off to a bunch of dealers that are smaller that can't get their hands on them, and they're marking them up, and those dealers are stockpiling them because they're investing in it. Like it's a funny game that goes on. But anyways, long story short,
I mean, it gets a little pyramidy, and then things start to collapse down.
So that was an update I want to make, because I talked about the cars. But going back to what you said, I don't think the mortgage payment is going to be the reason why they have to sell. I don't think it's that simple thing. And their interest rate on their home.
Well, it's the overall cost of borrowing across the board, especially unsecured credit, and the overall debt to GDP or debt to household income. Here's a random take. I think that we have sort of turned the corner on inflation. And here's why I think this. Like, the thing that frustrates me so much with the Bank of Canada, and I commented on this to someone posted something about rates maybe going to 8%, and which I don't think they're going to go there. The Bank of Canada did absolutely nothing while the horse was running out of the barn. Right? They did nothing. They were super slow to react. They made no changes. And now, so when inflation was going up, they were super slow to act. They did nothing. But now inflation is slowing a little bit. It's still out of control. We're talking from 9% to 8.3 to 7.5, 7.1. We're slowly dragging this thing down. But what did they think was going to happen? That they would raise the rate, and overnight inflation would go from record, near 10%, down to 2, right? Like one small increase, it takes a long time to trickle through all levels of the market. And the first thing to respond is the housing market. Like we've talked about how housing is a lagging indicator from a valuation standpoint, but the overall market responds almost immediately. Like look at what they did, with this increase, even before this most latest 1 or 2 increases. As soon as they turned that dial, immediately like the faucet shut on the housing market. Like it has been a collapse in volume now. I think we said it was 6 months in a row that housing volume listing like has gone down. So that happened almost immediately. The second thing that happens is people stop ordering things. I stop ordering stuff online. Companies stop ordering product that they feel that they can sell. That ordering cycle shrinks up because they can't rely on future sales. But that takes a little bit of time as well.
Yeah.
Right? Because they're still filling their existing demand in the moment. They already have orders placed 6 months in advance, et cetera, et cetera. But now they know things are contracting. They know their ability to borrow on things that they want to buy and then resell is getting limited. So that takes a while for ordering to slow down. Next, profit slows down. So people are spending less money. There's less things being sold. So profit slows down. And then unemployment happens. Like it takes a long friggin' time for that to trickle through. And we've talked about this with unemployment. It doesn't happen like you don't show up one day and they're like, hey, inflation's up, interest rates up, you're fired. Right? Like you have a contract, it's been collectively bargained or what have you, or maybe you're on a 6 month that can't be terminated, or maybe just your employer is trying to weather this storm. Unemployment doesn't happen right away. But the effects of the interest rate today will go through the economy for the next 6, 9, 12, potentially even 18 months. So we don't actually know if the interest rate today is enough to curb inflation. I actually think if we just froze right here and let the process unfold, we would continue to see inflation come down. But they're not having any patience, which is ironic because they did nothing before. They just waited and waited and waited. And now they're turning the knob every single month as if magically it's going to stop things overnight. It doesn't work that way. I think they could ride this out. And what's going to happen, and they've now been pretty open about it, saying like, we're going to have unemployment, we're going to have a recession, that is going to be the cost of this, which means you're going to bear the brunt of it. Everyday people are going to be unemployed. That's how this has to happen. But I think we're already at a point where if they just did nothing more, they're probably already there because they've broken the housing system, and now they're going to try to break the, complete all of the consumer industry and then break employment.
So I don't disagree with you at all. Everything I think is true. I just don't think that I think they know exactly what they're doing. This is something they are forcing a recession. Like big business, big investing, big money. Well, no, but this is just the start of it. Like they're going to go to a point where it's like general, like actual hurt in the marketplaces.
But that will come. I think if they do nothing more and just let the fruits of what they've done come to harvest. Like we would already have this recession with what's here now, but they're going to continue to turn the screws, I think, excessively for no reason. Like we're already there. The market already is acting like we're already there.
But I think you're thinking like they're doing it to a point to take control of the market. I think they're doing it to literally force it into the gutter to allow the opportunity, like on like a big financial scale, like big money. I'm a true believer of like this is a completely forced to the point where like it's going to be collapses. It's going to wipe out like small financial institutions. It'll wipe out a lot of small time investors. Like it's designed to literally drive people down because it provides opportunities for big businesses to like every time you see coming out of this, you will see the banks, like you said before, they're going to profit immensely. Huge corporations are going to profit immensely. It's going to allow them to reposition, make the changes they need to make, establish new business sectors that they want to establish, buy up stuff at hugely discounted rates. Like it's an
this is your back end conspiracy.
This is my back end conspiracy stuff, but it kind of like it checks out when you look at like over history. That's always what's happened though. Like
it is 100%.
You think to what you're saying, like you do not think that the economists that are a part of this that are making the decisions to crank these rates up aren't forecasting and understanding that AI alone, like the computer technology available today, could run a model that will simulate what's going to happen with the rates probably to like a 97% accuracy level, if not higher. And so they can probably run and see if they froze rates today, where things would level out. And I agree with you. I think things would level out, if not even dip a bit, like a fair bit actually. And so I think them continuing to dial it up is just pushing that dip further. Like I think they know exactly what they're doing. I don't think this is like they portray this thing of like, okay, we're trying this and that, and like we're seeing how it goes. But this is not 1935 anymore, where it's all newspaper based and like we got to test the market to see what's happening. This is like they have so much data, technology, and control and understanding of what's going on. They can forecast, they can project, they can see this is a decided thing that is taking place. And it's learning to weather it and run through it.
What's so frustrating then is people aren't mad enough because they go up there and they go, oh, it's just not working yet. We need to do it more, when actual understanding of markets, shows us that it takes time. So them saying up that there is knowingly saying something that's misleading. And people are just like, oh yeah, it sucks. It's too bad. But they, under the guise of like, we need to do this. This is our tough medicine, to get this inflation down. People are like, well, it is what it is because I need to get prices down on my stuff. But they also are being a bit lied to, I feel, by the Bank of Canada.
100%. This is kind of a side project and a bit of a digression, but like this is part of the reason I wanted to do this. This is also part of the reason why I always loved YouTube, because for me it felt like a truthful space where people, like, that's where I learned a lot about my interest in finance, and I learned a lot of things regarding real estate and banking and all that kind of stuff. That it's not necessarily the exact educated way, but it's an interesting take where people are able to share their opinions and logic, versus I found the general media, that like the news, the TV based stuff, is so controlled that they don't tell you anything that's outside of the standardized norm. I sound like a crazy conspiracist saying this, but like that's part of the reason that like a lot of these podcasts are so good, because it's people who are like have a general understanding of it, are in the weeds of things, that can explain it, like their take on what's taking place. And so I don't know. I think that's part of the reason why I wanted to do this, and part of the reason I think I've listened to a lot of people that on podcasts and YouTube, because it's like a more realistic perspective based on what I think is like all the facts, versus what the news and the media that presents to majority of the population is not media and facts. Like, we spoke with somebody today that's going to come on later on the pod, and she explained her side, and she said the media presented it like this, and it didn't make any sense. It wasn't what I was saying to them. And I want to say I'm a victim of that too. I've talked to the media, and then they presented something that was very different than the conversation that we had, and it was a very different tone. And it's a mixture of clickbaity as well as kind of what they have to produce. It's like tons of people who worked at the Washington Post, there's articles about how there was guys there that worked there that had made negative toned articles about Amazon years prior. And then Bezos bought Washington Post. Guess whose jobs disappeared? It was just by some weird fate that those guys ended up going missing. Or those same editors now make articles that are super Amazon positive.
Yeah. I mean, now this episode's going to get shadow banned, sent down to the bottom.
That's proof of concept. It's going to get shadow banned and put sent down the bottom. It's another conspiracy episode.
What's really frustrating is it makes it hard to make financial decisions, because you're like, well, all the economic drivers would indicate that we are at a rate where, like, you can kind of predict it. You're like, okay, by the end of the year, and this is where we were thinking, like, all right, the bank rate will be somewhere around 3.25 to 3.5, and by the end of the year, and it was going to be a bit higher than that, but not a crazy amount higher than that.
Yeah.
But that would do the following. It would break the housing market, which it has. The markets would get crushed, which they have. You'd wipe out a significant amount of net worth.
It's slowed the housing market, and it's depreciated the market, I would say. It hasn't broken it.
Okay. It's I don't know what you call like 6 months of contraction. Like, that's pretty fractional.
People losing their houses.
Okay. I don't think the measure should be people losing the houses. If people lose, 15 to 20% of the equity in their house,
totally.
that is a collapse.
That's huge.
Right? And we talked about how it's over $1 trillion of household net worth loss.
I'm not saying size. I just mean like,
you would think rationally and from an economic perspective and all that good stuff that would suffice, and they would let that bear out, because that would be the correct thing to do. And then they don't do that, which makes you think, well, how am I supposed to make any financial decisions if the rules kind of don't apply, if common sense doesn't apply, and if there's no checks and balances? And you get Neal's train of thought, which is like there's something going on behind the scenes. It's very, very frustrating. But we're getting long. We got to save some room.
We've
for
gone
our
off on
topic
the side,
here.
but I think this is part of. I think, and some people comment if you disagree or agree. But I think some people listen to this and all sorts of other sources of media for the simple fact that they don't necessarily trust 100% what gets presented to them in the standard form media. And you know what I mean? Like, I think they're trying to get an alternative perspective and an alternative opinion. They're trying to formulate their own idea through getting a lot of opinions. And I think the value and why the general grassroots concepts like YouTube and Spotify, Apple Podcasts, all of those have grown so much is because people are hearing the truth, not necessarily truth, a different perspective that isn't something that as manipulated.
Yeah.
But
well,
anyways, long story short, to answer it, that's why I think that they know exactly what they're doing with the rates. And I think it's, to what you're saying, I think I agree with you. I think we've gotten past the hump. If it's starting to go down and it's consistently gone down, unemployment's starting to go up, the housing market is slowed. Like, I think we're at a point where they could cool off the rate hikes and things would go totally fine. Like, it would definitely still beat people up a lot. There would still be lots of carnage over the next year, but it
would slowly bring down inflation.
It would slowly bring down inflation, and it would eventually regulate things, and it wouldn't be a massive fall off. But I think they're going to keep going until it is a massive fall off, and that is intentional.
Well, thanks for listening to this point. Again, if you have any theories, if you have any comments, please put them down below in the comments. Please press that like button. It means so much. I just want to hit up a couple things, just maybe on a lighter note. The New York Times did this story on apartments in Tokyo, 95 square feet, which is approximately this studio space.
Honestly, doesn't blow my mind. That's kind of big, like, for over there.
Kind of big.
Well, for over there. And let me finish what I'm about to say. So,
ladies, be advised, Neal's perception of what big means is a little skewed.
2.5 centimeters. So,
this is about 9 inches, right?
Don't
we'll
tell
see
me
what
it's not.
has to get edited. See what
So, no, I don't mean it's kind of big. That is extremely small. But on the flip side, and again, go to YouTube and type it in, but cage houses. And so in Asia, in Japan, there's also a giant, like, that's an apartment. That's listed as an apartment. There's an underworld within Tokyo of, I think it's like hundreds of thousands of people now that live within actual cages. And those cages are about 6 feet long, and they're maybe 2 feet by 2 feet. It's a little...
What? That's a coffin, bro. That's not a cage.
No, but people, there are...
Like vampires?
There's
get up like this?
Legitimately, there's hundreds of thousands of people that live in these, and they pay rent. What they're doing is they're taking apartments like this, and they will stack all these cages everywhere, and they rent them out. And people live in this. And that's a lot of the working population, not like the... basically minimum wage over there, like those types of jobs.
Yeah, that's what these were too. Like,
so 95 square feet, like, that's your own space.
20-year-old, like, you know, they're in their 20s, and it's got 12-foot ceilings, so they do a loft. You have the bed upstairs, and you got 95 square feet, and they pay about 400 to 700-ish in rent for those.
That's not like, that doesn't...
That's psycho.
Well,
psycho.
It's psycho, but that I'm looking at this. That's like $4 a square foot for rent for residential on a monthly basis. I pay $4 a square foot for rent on a monthly basis. Like, it's insane. It's crazy that there's 95 square foot apartments. But my thing is, over there, they have cage apartments that are, like, people are literally living in cages together. And it's not like there's like one family doing this. There are, like, the population of Halifax is doing this over there.
Yeah, that's wild. And it's just hard to wrap your head around what's going on in the world with all this stuff. And we talked a lot about China and the Evergrande situation over there, and now the Chinese government is bailing them out. Did you hear this?
No, I haven't heard of this.
So
on vacation.
They say they're resuming almost all of their stalled projects. They had some like 700 and some odd stalled projects, and they're now resuming like 680 of them. And this is in spite of the fact that the mortgage strikes have continued. They're up to like 340 odd projects now that have full-on mortgage strikes where buyers are no longer going to pay their mortgages on those unbuilt properties. But what the government has done is they have actually lowered interest rates, very much in contrast to what we're experiencing over here. They have strongly encouraged lenders to continue to lend to developers, and they have set aside the equivalent of $500 billion US as a bailout to these developers to get the housing back rolling again.
Which, I mean, makes sense because it's such a integral part of their economy. Like, you can't...
Yeah, it's weird to see them on such a different timeline than the rest of the world, when everywhere else is trying to curb the economy, jacking inflation and all this, and jacking interest rates, and they're Like, are they behind us? Are they
No,
18
I
months
think
ahead of us?
they're
Like, what
way
is
ahead
it?
of us. I think there's a general, again, where it's a communist nation, so they can make their decisions. Their focus is purely on just massive growth, and I don't think they're so they're also manipulated by big corp and the few people who have everything. But their way of doing it, where they have control, they can just make decisions. They can just be like, all right, we're going to do a giant bailout and we're going to push this construction through and make it ramp up. Here, they need to blend in a facade to make a drop off take place, allow them to buy in a bunch of stuff, and then regrow with it. There, if you want to if you're rich and you know someone politically, you can, or you want to become rich, but you know someone politically, they can make you rich like that overnight. And that's just how that works over there. It's so corrupt. They can almost focus as a whole as just growing the country and choosing who gets to win out of that. And so that's allowing them to just focus on forcing their growth. So I don't know. I think they're more focused on growth of the country as a whole, and where there's so much corruption, they can just pick who benefits from it. They don't need to kind of create these downturns.
It's really interesting though how they turned their sentiment and their opinion of Evergrande like so quickly, because they were just seizing their assets, taking over their headquarters, calling their notes, and now they're like, we're gonna bail you out now. So it's kind of I'm curious if something's going on behind the scenes there too.
But anyway, a picture of a cage home.
That's a picture of a cage home. Yeah, make sure the guy's splicing. Oh my god, that's crazy.
These aren't one-offs. Like, these are all people living in these.
These pictures are crazy. Hopefully, you guys can log in and check those out.
The cage is all the way through the apartment.
That's actual like physical cages. This is crazy. All right, on that note, Neal's going to talk about the new construction projects he have, which are very similar to these cage houses, except they're going to be lobster traps, because we'll never forget our East Coast pride.
East Coast heritage. We should make a joke about that. These people living like this. But when they interviewed the people that were living in these, a lot of them said, "These are my home. This is my home." Like, I'm not a lot, but there were some people who were comfortable to be living there. And now there's startups. Like, there's startups in China that are building like modern pod style homes to replace the cages to make them a little more.
Yeah, I mean, these people also love their 95 square foot houses, but it could just be because they're like, I'm just happy I'm not in a cage. So who knows?
No comment. All right,
we're gonna push some of the stuff to next week's topic.
Yeah, we got
to get into new construction here.
Let's do it. So, anyways, we've talked about before. We said the burn model is dead. And the burn model is not dead, but it temporarily is very difficult to complete because the takeout mortgages that you're getting are more difficult, like just lower loan to values because the rates are higher, so the debt servicing is not there. If you want to understand some of those terms I just said, we talk about it in depth on Patreon. But basically,
I just did a whole episode on the burn model and broke it down. And one of the things you'll notice is on the small scale residential, especially, it is not that juicy. On a larger scale, it still can be, but the gap's closing, right?
Exactly. But on a basic scale, the income that a property generates is what they're using to qualify the mortgage that you're going to take out of that property. And now that mortgage is so much more costly. And yes, rents have gone up, but they haven't gone up proportionately. And so that mortgage you're able to take out is quite a bit smaller than what it used to be.
Yep.
Now, that doesn't necessarily completely nuke the value of your property. It just means you're leaving more equity in that property a lot of the time. It will degrade the value a little bit, but there's still a lot of equity being left behind that eventually sometime down the road you'll be able to get. So if you're not needing the money immediately or not like in that kind of crazy growth mode, it doesn't hurt to still do it. But if you are still trying to do that where you want to grow, we're talking about some options with new construction. Now, new construction's facing the same issue though, where people are struggling to take out all of the money that they spent on construction.
Oh yeah, they're having to leave a lot of money in, or even put new money in.
Put new money in. But we wanted to just dive into it a little bit because there might be some options out there with financing options that CMHC offer to help you get there. And I think we've talked about this before, but the government's going to have to do something to help spur it. And I saw
100%.
Yesterday, a town here in Nova Scotia is offering basically giving out the land for free. Plus, they're offering to pave the roads to help you go in there and build subdivisions or build apartment buildings. And so they're starting to kick stuff in. So you're going to start to see that happen. So even if you can't get the money out, you might be able to get some stuff covered by the town or community that you're working in, plus get a CMHC loan that allows you to get 100% of your cost. So you'll get no lift, but 100% of your cost is covered.
I also think that there's a really good margin in the small scale stuff. like
Totally.
6 units and under, even up
House
to 12
conversions.
units. Yeah, house conversions, things like that. But we're talking new construction here. If you get the right lot and you could put up 4-6 units, I think you can do really, really well on those because you can build them for much cheaper. And, even though appraisals have pulled back a little bit, they're still pretty juicy.
Yeah.
So the small scale new construction is really interesting as well.
Yeah. So what we want to talk about today, again, is on a high level, just kind of what the process looks like, and then our overall kind of sentiment and takes on it. So the first thing we're going to kind of touch on is, obviously, everyone knows what a new build is. That's a ground up. There's no building there. It's not a renovation. You're starting from scratch, putting a foundation in the ground and building upwards. There's two kind of main types when you're looking at apartment buildings, and that would be wood frame construction and concrete construction. Pretty obvious. Wood frame, it's built from wood. Concrete, it's built from concrete. So the floors between everything is concrete. You do get a hybrid model that people do a lot, and that is where it's concrete on the main floor where the commercial spaces are, and then above that it's wood frame. The biggest limitation with wood frame is the height limits from building code. They've been up to 8 stories now. They're looking at doing mass timber that can go a lot higher than that. Concrete doesn't have a building height limit as far as I understand. Like steel concrete can go
The moon, baby.
to the moon, basically, as long as you have the engineering need and budget to get it done. And so that's where you see downtown, all the downtown cores in every city. It's all massive concrete steel buildings. And then as you go into the neighborhoods and you see those low-rise, mid-rise buildings that a lot of people live in, and they're the big, long buildings, those are all wood frame because it's a fair bit cheaper. Or it used to be a fair bit cheaper to build those. And so they do that, but they're limited on their height. Now, the first item in doing any new build is land. Getting the land, sourcing the land, figuring out if you can build. So how that kind of goes about is first, I mean, it depends. Like there's a million ways because you bought a piece of land for a very large development, I think, before you're in a position to do the development.
Yeah.
Like you're starting to look at it now, but you bought that land how long ago?
5 years ago, I would say.
Yeah, and
I
you
stubbornly bought a giant piece of land just because I knew there was so much value there, and I was I couldn't find anything else. I'm like, I guess I'll buy this land, and I got a favorable take back from the lender and all this good stuff. And we talked about this before. The land is so crucial because if you want to make a play on a development whereby you put as little as possible into it out of your pocket for cash, the easiest way to do that is to get a smoking deal on the land. So in that particular case, like I bought the land for I think $700,000. And then I ended up kind of having an appraisal for around $3.5 million. So, and that took time. That took a development agreement. That took 4 years of appreciation. It took all that sort of stuff, and I had to carry it and pay those soft costs. But with some pay down, and the amount I had to initially put in, I was virtually up $3 million just on the land. So then if you've got a project that maybe is $30 million for the whole build, you've already got 10% equity. Now that's an extreme example, but it stays true for land at all sizes. If you can find a real opportunistic buy on a house that's maybe $250,000 or $300,000, but it sits on a piece of dirt that could allow the construction of 20 units, all of a sudden, at 25 a door, that's a $500,000 piece of land. And so you've gotten that lift of a couple $100,000 just in the land play.
exactly. What did you? And again, I know I've said this a bunch of times. We got a big sign sitting here, but we will dive really deeply into what that actually looks like in a Patreon. But what were you kind of basing on? Like when you looked at that piece of land, what enticed you to be like, this is, because there was other pieces of land available that you could have bought. What were you looking at that was like, this is a real reason I think I'll be able to get something here? Because it wasn't directly zoned. Like that piece of land, when you went to go buy it, it wasn't zoned like, you can build.
It was zoned for a triplex. It was zoned for a
So
triplex and some townhouses.
he bought a piece of land for $700,000 to build a triplex and some townhouses. And at that time, a triplex wouldn't have even been worth $700,000.
No, not at all. I understood in my local area kind of what the process was for development agreements, and that's something that you can do by talking to a qualified planner or just being engaged in your community development process, like going to some of these hearings, talking to people at the municipal level and finding out. I just knew that there was enough dirt there and it was on a main road that I could go through the development agreement process. And while you never quite know what that's going to yield, I had a pretty good idea. I also monitored other projects in the area and what they got for their massing. It's like, well, if that person can do this much over there, then I can do the same because my lot's effectively the same. So, and it was, neighboring some other property I had. I think we've talked about that before. It's in my own neighborhood. So I bought it for sentimental reasons. I bought it because I knew there was a play there. I maybe, bought it too early and built it or planned to build it too late. But so I'm just kind of sitting on it right now. But that was the thought process.
Two things I want to mention. When he says there's enough dirt, he didn't mean physically enough dirt. He meant the square footage of the space. You'll probably actually have to bring some dirt in, won't you?
No, because there's actually a really nice grading to it. We'll carve some out. We'll probably have to take some out, but 2 stories of parking, right? So you got to take a little out. Yeah.
This guy in the parking garage is.
I love me some parking.
So I'll comment on one that I bought. It was an acre of land, and it's got a duplex sitting on it, which was nice because it allowed me to finance based off the duplex. So I only had to put down 20%.
Huge. If it has an existing structure on there that can be financed, it makes your life way easier.
Yeah, and it's something that's going to basically carry the cost of ownership while I get the permit done on it. But what I was kind of alluding to when I asked when you were trying to make the decision, like with this one, same thing. It was zoned for a duplex.
Yep.
But I made the decision because around the corner, someone else had gotten approved an apartment building. And next door to me, there was commercial, and I had frontage on a main road. And so all of those things made me believe, even though right now it is zoned for a duplex, going to council and being like, look, like it's on a main road. I have commercial abutting 400 feet of my lot. I also have I see that you guys approved an apartment building right behind me with the original same piece of zoning that I had. So, by looking at all of those things, it kind of gave me some confidence to buy. So that was kind of something I wanted to just mention is like, it's not going to be as simple as like, boom, here's a lot. And you're like, oh, you just breed it. Oh yeah, it's good for 40 units. Sweet. I'm just going to buy that. Because if that's the case, it's going to be marked up as a piece of developable land, and it's going to have a very high cost associated with it.
Yeah, which is fine if you have deep pockets, but then you don't get the lift that I was mentioning off the top, where you want to have that equity in the land that then can count towards your equity component of your financing the whole project.
You'd be buying it at that $3.5 million value, right?
Exactly.
Because that's what it's worth then.
Yeah.
So now you got the piece of land, and we've kind of already started talking about it a bit. You think something's going on there, but you need to go through the permitting process. You've gone further than I have. I have some in the works. I'm banging my head against the wall because it's a very slow process. It's not something that you can get, like, doesn't matter how crazy you go, at least in this local community, but you can't push it along too much faster than what their systems allow. Kind of what does that look like for you, and what I guess
so
kind
there's kind of 2 levels of it. Like there's a development agreement, which then allows you to build something on a specific piece of land, and different municipalities will have different equivalents of a development agreement. It's sort of like, well, there's what you can do as of right in that area because that's just what we've said, that land can be used for this purpose. A development agreement says, hey, there's enough of an argument here to do something different, so let's have a conversation / negotiation where we, me the developer, and you, the city, agree on some unique ability to do something else on this property, and that results in a signed development agreement that goes on the title of the property that says you can build this on that property. And then permitting is, okay, you're allowed to do it, now do it correctly and bring me all the technical side of it to start construction, the stuff you need to have signed off on by engineers and by all the utilities to actually then build the property. So, you go from, purchasing the land, doing basic massing of what you think you can get there. Then you apply to the city to say, hey, is it cool if I build this? And then you start going actually through the regulations and the code and the technical components of how to build it within the requirements of building code effectively.
Exactly. Just talk a little bit more about the as of right. That's like literally what is the lot is zoned for, and you can build per the rules that have been applied on that lot. So again, just to break that off. So sometimes you will find lots that as of right, you can find within sometimes these plan documents can be a little bit difficult to understand. You can see that you can build a fair bit of stuff. And now with locally our center plan, it allowed a lot of lots to be more easily understood as of right what you can do.
Yeah.
And so now you can say, okay, as of right, they don't say a unit count, but they'll give you dimensions of what you can build.
Height or gross floor area ratio.
Height, setbacks, close floor area ratio. And with that, you can determine, okay, I can build 40,000 square feet. And I know out of that, I'm going to get 80% utilization for units. And out of that, I'm going to build the units at an average of 700 square feet or something. And you can kind of quickly mass out what you're going to be able to build there. And then you can see, okay, wow, there's a lot of value in this, which is just a house.
Here's a funny way to explain the difference between as of right and a development agreement. So there was a highly contested development site in Dartmouth where as of right, the owner could do very minimal things. You could build a house, you could maybe build a duplex, you could do a couple things here and there. And one little thing, you could also build a hotel. But anyway, it's like, whoa, wait, what's that last part about being able to build a hotel there? That sort of stands out. But this was some antiquated old component of the bylaws for that particular area that says, as of right, you can build a hotel there. And of course, no one ever thought you'd build a big hotel in this location in Dartmouth. Maybe there would be like a strip motel or something like low rise.
When they put that zoning in, there was no density there to
exactly,
ever
there was no
service a hotel.
That you would ever have a hotel there. So years later, this developer's got the land. They're like, listen, I can build a hotel here. And I've got plans for a beautiful 12-story hotel. However, instead, I would like to just build an apartment building, and can you give me a 10-story apartment building? And so the latter, the application to build the apartment building instead, that went outside the as of right ability to build a house, build a triplex, or a hotel, had to go through the development application process, which was a negotiation with the municipality. And the neighbors were like, we don't want that apartment building here. And the city very rightly was noting like, I understand that, guys, but if he doesn't build the apartment building, he can just build this big hotel. And which would you rather in your neighborhood, the apartment building or the hotel? And the neighbors were like, he's never going to build that hotel. Let's call his bluff. And they fought him tooth and nail. And eventually the city got him down to, I think, an 8-story residential building.
Yeah.
He was like, okay, I'll just do an 8-story residential building. And still, some people in the neighborhood fought him. They took him to the utility review board, and it was a nightmare. And he says, you know what? The market's changed. The hotel industry is bumping.
Guess what's
and
there
he went
now?
and he pulled a permit for a hotel.
And guess what's there now?
Yeah. So as of right, he could do the hotel. He was trying to do a development application for something else. And he got obstacles, so he went with what he was able to do as of right. But that shows you the difference between what you can do as of right and then how an application would work.
On a side note, that's been the slowest construction project in the history of time.
It is taking a while.
Like 3 stories up. I don't know.
No, there are more stories, but it's still concrete skeleton. It's been paused at that for quite some
what
time.
they're doing. That's been a weird site with a lot of issues. But anyway, so now you own your land. You've gone through the permit process. You have figured out what you can build. You've gotten the city on board. Okay, you can build 50,000 square feet, 60 units. Now you actually want to build the thing. Time to do some budgeting and figure out what you can do and what that's going to look like, because it's going to be budgeting and financing. These are 2 steps, but they're kind of really one. And it's something you probably start even once you're through. Like the second you have a rough idea from the permitting process, you're gonna start this, because it's a big task to get the numbers dialed in, and then getting a bank on board, because you're no longer talking about. It's not just even the quantity of money. It's not necessarily because it's so much money. It's also the idea that they're getting involved in a very risky process. There's not anything there. Like if you default on a house, the bank doesn't want your house. But if you default on a framed up house, they really don't want
half completed project.
A half
huge
completed
liability.
project.
Yeah.
So a lot of times there's multiple banks involved. There's a ton of insurance problems. Like there's a lot that goes into it. So for you on the budgeting side, you again also on these big projects, banks usually won't let you self-build. And you probably aren't in a position to if you haven't done it before. Like going through a self-build on a large building is very difficult.
Even on a small building, they're going to be like, so wait, you're going to build this 4-unit, this 6-unit? Like, who are you?
Yeah.
Like, oh, well, I do it on the side. It's my side hustle, but I've got a great...
I have a sick IG handle that I renovate some houses.
Like they're going to want to see more than that. So they might force you to bring a contractor on either way. And they'll have price analysts, like cost analysts through the whole process. And this was the challenge with why I kind of, paused my development, is that one of the things they do, like this design phase, like once you have the approval, you still then have to go design the building, and then you kind of have to price it out, and you put your best estimates in. But we're in a marketplace where those estimates were getting out of date in 30 days, and the prices were just going up and up and up and up and up. So the cost to build it was ballooning like crazy. And then from a financing perspective, they build in a rate range. So they say, okay, it's going to take you 18 months to build this project. We know what the interest rate is now, but we don't know what the interest rate is going to be 18 months from now. So we'll build in you a nice juicy cushion of like 100 points, maybe even 150 points. Well, what's happened over the last 6 months? 300 points.
Yeah.
Right? So a lot of projects became untenable. And in my case, it was actually sort of a blessing in disguise that I wasn't midway through this project when these rates went up, because then they would come to me and say, yeah, you can keep building it, but we're going to need you to put more and more money in. And you might get to the end of the project, and rather than them being like, here's your nice juicy refinance for your end finished building, they'd be like, yeah, we'll do that, but you need to come up with extra money. So there's still risks associated to it that are not dissimilar to the BRRRR model. However, we're both of the mind that there's going to be some government intervention to allow housing starts to tick back up with some more improved programs. There's also, you're at least getting newer stock, and if you can fashion it in a way that your capital upfront, your investment is small relative from a loan to value perspective, like if you can get into it with 5 or 10% down, isn't that much more exciting to then have a nice finished brand new building, as opposed to doing a BRRRR, flipping a single unit to maybe a duplex and getting like 15,000 of your $30,000 investment back? Like a new build is pretty exciting in a lot of ways.
So before we tap that off, a couple things I want to ask you about. Permitting costs.
Mm-hmm.
What did you face when you were talking about permitting costs? What kind of costs did you spend to get the permit, and then what were you paying on permit side?
Yeah, I mean, your biggest permit here locally is your water one, which I think I squeezed in just before they raised it from $1,800 to $3,000 per unit. And I was that was for like a 60 unit building. So it's like $100,000 just to get my water permits.
Okay. What did you spend on like engineering, consultants, planners, and all that kind of crap to actually get to the point of getting approved?
Yeah, my total soft costs, I mean, probably with architects and engineers to date, plus a 6-month design consultation, probably 250,000.
You're including engineering in that, so like that's got your mechanical, HVAC, plumbing, all that kind of crap engineered out, or is
yeah, and some of them went further down, but like the geotechnical, the environmental, all the stuff that goes into to analyze your site, your surveys, all of these things, and typically that's handled through either your architect or your contractor. They essentially go out and source all these sub trades. But yeah, it's hundreds of thousands of dollars of soft costs before
building permit.
We didn't pull a building permit, so I don't know. I couldn't speak to that, but we didn't get to that point.
But so you're probably about 350,000-400,000 into this.
Yep.
Prior to having a building permit, prior to having a shovel in the ground.
Yeah, and that's a that's a bigger project where it's, again, I think 60 units, or it's been a while since I checked. That's a large project, and that investment isn't lost. Like that has raised, and that all counted towards what would have been my down payment component, effectively. Yep. So it's still value there in it.
Soft costs can be financed in a new construction build. Yeah,
it counts towards the overall cost of the project. So if you're paying that out of pocket, you do get equity credit for that.
Exactly.
But it's still money out of pocket up front, right? That you're doing to try to get this project off the ground. And you're going to have that same situation if you're building something smaller. Like if you're building a 6-unit building, like it's amazing how people want to plan this project and then they turn their nose up at paying an architect like $20,000 or whatever. It's like, man, you need these people to do what they do. You have to budget that stuff in there. A planning consultation, surveying the lot, all of these things, they're kind of requirements. And if you're serious about it, you want to employ the right people to help the process go smoothly.
The tough part is on the small scale, some of these costs, like they don't go up at the same rate. Like to do a 60 unit, you might have spent $100,000 with an architect. To do a 6 unit, it could be, like you said, it could be $15,000-$20,000. So you're doing 10 times the size project, but you're only paying an extra 5 times the cost. And so that's also why you want to do giant projects, but it's very hard to get to that scale. Like you have to work your way through the process. Yeah. So just understanding, if you're listening, that those prices that Chandler's mentioning are not necessarily scalable. Yes, the water permit, that would be, and building permits, like those things will scale, but some of your soft costs overall for engineering, architectural, and planners will not scale, unfortunately. But overall, how do you feel about the new construction outlook moving forward? How do you feel about your build? Like where you see things going?
Yeah, I mean that's still the holy grail for me personally, and I'm going to get there. But I am probably going to first do, something out of wood in the interim, smaller scale, stacked townhouse sizing, just because I think right now, price wise, that's easier. And then I do think long term building and building out of concrete really is the long term hold stuff. The wood frame is good, I think, for buying and maybe selling at some point.
Mm-hmm.
I'm optimistic, like I said, that there's going to be intervention from CMHC and the federal government to make the numbers work, because frankly the numbers don't work. And I've posted some videos about some uproar people had about the rental costs of some units on Agricola Street here in Halifax, how crazy they couldn't believe how expensive these rents were. And then in breaking it down, it's like, yeah, that he or she, the landlord, is losing money on some of those rents and making it back on some of the others because the margins are that low at today's costs.
Mm-hmm.
So we're going to have a massive shortage of housing here if we don't change something really, really, really quickly.
What were you quoted per unit cost? Just a high level.
It's about $335.
$335. That's not including land or any of the soft costs.
No, that included the land and soft costs.
Okay, so your total was around $335 a door to get those buildings up. Have you quoted any wood frame buildings?
No, but there was a time where you were maybe 10% lower for wood because wood was so expensive, right?
Yeah.
So like it wasn't much difference, and you obviously just get a way better product with concrete,
Yeah.
but a way slower build.
Yeah.
Right. So there's a bunch of trade-offs, and wood's coming back down a little bit. And there's some cool like overpour techniques with wood that are really good now too. So you may find that 10%, which is not insignificant on a big project, with like some steel like hybrid builds is a good way to look at it too.
Yeah. I was quoted on wood frame for a 100-unit building, and I think it was coming in around, without land and without the permitting costs, around $265 a door.
So there you go. There's your $300 a door, really.
And so once you're all in, it's $300 a door.
Yeah.
And unfortunately, the values of the units were not $300 a door at the end.
Well, this is the thing. Yeah. It's like that building. They were like, yeah, we can build it and be $335, and they're worth $335.
This is exactly, and that's
right.
That's what I was facing. And exactly to what you said, we've done a few reels about it before, and we've broken down kind of the costs associated with building and actually carrying the building, and then what it looks like and what they need for rent to cover that cost. And a lot of people were like, well, we shouldn't be paying down your mortgage. So we did numbers where we removed the mortgage and we just include the depreciation, because when you live in a unit, you do ultimately wear out the cabinets, you wear out the floors, you wear out the appliances, you wear out the plumbing and all the things that go into it. And so just utilizing a standardized depreciation and adding that in with the interest costs of carrying the building and all the other insurance costs and everything on top of that. And we still found that these rents need to be $1,700-$1,800.
Well, here's some back of the napkin math, and this is what I posted in my video. So just say for really easy numbers, it was actually only $300,000 per unit, and if you did conventional financing at the end with the current environment that we're in, we're talking 75% loan to value. Obviously, these other programs have longer AMs, and you can get less money in, but in exchange for the longer AM, your payment actually doesn't change as much as you might think. You just have to put in less money out of pocket. So say you just did the rough numbers of a 75% loan to value. That means you're actually borrowing $225K per unit. So the mortgage per unit is $225,000, which at commercial interest rates right now, it's 6.5%, which would be a pretty good commercial interest rate right now, is just over $1,500 a month just on the mortgage. How psycho is that? Okay. But now you have to pay property tax, and property tax on that unit is going to be about $250. So now you're at $1,750 per month just to break even on that property. Now you have to insure it, which is probably $75 per unit, so you're at $1,825. Most places are going to have at least water included, so now you're at $1,850. Some places will include heat. That's pretty common in new construction, but they're easy to heat, so you're probably up around $1,900. And then you have to clean the common areas. You have to hire staff to work the buildings. You have to do plowing. You have to do shoveling. And you might actually want to make a profit at the end of the day. So maybe we call that $2,100, which means to break even on that property right now would be $2,100 a unit. So when you see a unit that you think is ridiculous because it's a bachelor unit and $1,700, realize they're actually probably losing $400 per month on that unit based on a per unit cost. And then the other ones that are $2,700, maybe for a 2-bedroom plus den, they're making $600 on that. And that's kind of their window there. It is razor thin. People don't like to hear it, but that's the truth of it. So if you're wondering why the rent's so damn high, there you go.
The big thing
Don't
I
shoot
want
the
to
messenger.
explain is, yes, I mean, the listeners get it, but in that mortgage payment, yes, we're paying on principal, which is what everyone bitches about, but he's not including depreciation. So if you look at depreciation, 4% of that 300,000, that's 12 grand, that's $1,000 a month. So if you take out the principal payment, which is $1,000 from that mortgage, and you make it depreciation, it works out to kind of be the same thing. And so realistically, like Chandler mentioned, that's what you need. You need $2 grand a month from a lot of these units to be able to make it work. But before we end, we have to end on a more positive note, because I've had a few people come at me.
But the appreciation too and the pay down, it's like, how do I get that?
Which, sorry?
Like, how do you get it? Like, they're saying, oh, we're paying for your pay down, your principal investments. Like, yeah, that's net worth. But if I get it, like, how do I get that? I have to sell it, and then I'm taxed at it anyway.
Yeah, you're
Right,
losing
like,
on a
so,
monthly
yeah.
basis, which you need to operate and run the business. And when you do pull it out, you have to then renovate the building, which costs a ton of money, and fix a bunch of things. So, no, I get that.
Yeah.
But like I said, I don't know. We can't end on a negative note. I had some people come up to me and be like, you guys end on negative notes.
Oh, really? All right.
So it's
Hot
fall.
dogs are still $1.50 at Costco. Go get one right now. They're freaking delicious. They'll make your day. I promise you.
And it's a beautiful fall. So just go outside and enjoy it.
It is a lovely fall. We've got a banger episode coming up next week as well. Super excited about that. We've got regular content. The Patreon has continued to get loaded up. We've got some cool stuff about the DCS, your debt service ratio.
We've got a
stuff
website
about
coming
the
with a
model.
forum where we talk about deals.
Yes, we've been talking about that for forever, so that is coming. And life is generally good, man. I mean, Neal was just in Italy, because he's a big shot. So things are good with him. Life's good. Life's good.
Except for the car prices are going down.
Yeah. There we go.
Anyways,
All right.
thanks for listening, guys.
Next time. Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.
When I was broke, I had rich habits. When I was broke, I had rich habits.